Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So it is Wednesday, and tomorrow I'm actually in Short Hills, and then I'm heading out to Florida for the BOCA conference, the post-inauguration conference on where do the markets stand. So that means no morning call for me tomorrow or Friday, but I will tweet to keep everyone kind of in the loop of what I'm doing. So there'll be also no recap. So you're on your own. So I'm going to try and give you a little bit of levels and some charts and some thoughts beforehand, and I have to go fast. So anyway, here's the S&P cash. S&P cash right now, look how symmetrical this chart is. A lot of people have been saying, hey, we're going to buy the election, sell the inauguration. Well, at this point, if you remember, the market triggered its rally right here. This is when it broke this descending trend line after this small little shakeup into the bigger trend line. And you know what? Broke above, held, and then boom. So from here, another trend line. This is your active trend line for active traders like ourselves. So if those bears want to come out and growl, they're not going to be doing much growling unless they get a move and close below this spot. So right here, this is your spot. You could write down 2254. Tomorrow I bet you is not such a volatile day. Maybe Friday on inauguration day. But to me, this looks like you have a nice setup for another move to the upside. So I'm kind of leaning long. So if you're long, you can be long versus this spot. And if this happens to take this out, get above 2272 or 2277, maybe some of the upside move happens towards 2300. But for right now, this is your range, and this is your accelerated trend line. Even if you broke the accelerated trend line, doesn't mean the market's going to crash. It means maybe you see the 50-day or even lower in the next coming months. But for now, this is your range. It looks very tight, and we'll see what's next. As far as sectors, not a whole lot of sectors to give you leading indication or lagging. At this point, the Qs have been very strong. To me, I still think it acts very well. The Qs made new highs while the Dow, everyone was all worried about Dow 20,000. Well, this is what happened here in technology. Broke out the highs above the 8-day moving average. The market cannot sell the inauguration if it stays above the 8-day moving average. So write down this, 122.66, or if you want to give yourself a little bit more room, here's your other pivot. That's a 122.80. So that is your spot. If you're a short-term active trader and you're trying to swing some longs and you think the rally continues, you could be long versus this spot or maybe even this one. And if it wants to continue to lead, there is your resistance. Real quickly on the small caps, here is that. Still a little lethargic, not acting so well, but look at the size of the move we had from here. All in all, still holding the bottom end of this range, letting the 50-day moving average catch up. Upper end resistance is right here. If this were to break and close below, maybe that would, have some bulls take some notice. So keep your eyes on that. So with all that said, so far we've had the financials report earnings. They were able to sell Bank of America. They were able to sell JP Morgan. Yesterday we talked about if they sell Morgan Stanley, the other banks could come in. And then today, figured, hey, they're going to try and sell Goldman. Maybe we'll look for some red dog reversals around yesterday's low, or maybe if they get below that, it goes to the 50-day. But I think in this area, it's more buyable versus the upper end where it was on Friday and Monday. So if you look at Bank of America, they did sell the earnings, but not crazy up here. But look what happened. It held the lower end of this range. So the bears will not be growling, in my humble opinion, if this continues to hold. And at this point, I actually bought it this morning, and I took some off. I probably should have just held it. But at this point, this channel is still intact, and it's doing some nice work ever since taking this out. JP Morgan also did a little bit of that as well, but actually a lot of that. Look at this red dog reversal. This was what we call a red dog reversal, right? Here's your topping tail, broke above highs, came in, it sold off. Because of that, couldn't go up on good numbers after a big move, so it went down, and then today went below 83.28, back above. That's your entry. So now you can be long versus this, and who knows, maybe it gets up and goes a little sideways and tests those moving averages. Goldman Sachs, a little back and forth today. Not quite a close on the red, or a close in the green, I'm sorry, but at this point, you have a new point of reference, 231.52. Range expanded, so this is your spot. I think that it needs some time. It did break this area, so at this point I don't think it's going to be a leader, but it's not going to be a headwind unless it starts taking out today's low to move further down. So let me see what Netflix is. Netflix came out with earnings after the close. This, to me, is pretty important. Okay, it actually is up about 7%. It was up 10% before. That's what's good to know about straddles. Right when it came out, I said, A, in order to get going, it's got to break above the recent pivot high, and B, the straddles, that means if you don't pick a direction, it's pricing in about a 10% move, which is about 145 to 146. That's exactly where it went to after hours. So if you're looking for a cute spot to short, that was it. If you were long and you bought 135 and change, that was your spot to sell, and now it could be a little bit noisy. Why was this your pivot? Because this was your pivot high, okay? Anything above this, if you're short, you got to cover, right? That was your 135.40. Got over that quickly, okay? I guess somebody knew something, considering that this chart was one of the strongest charts in the market, you know, as it's been above all the moving averages at all-time highs. So now all of these people could pick and choose whatever price they want to sell. Congratulations to investors in Netflix. Last time you had a big gap up, it held, never filled it. Nice pro gap. It's been above the 50-day ever since, above the 21-day since. That's a great looking stock. And if you take things for earnings, congratulations. If you played it after hours, you had to be quick and grab it quick, and then maybe you did sell into the 145 spot, which would have been a 10% move, which is where the option guys want to stop it. Otherwise, they have to pay a lot of people a lot of money that didn't pick a direction. So I'm going to close you with some of the high beta names. I still think they look good. Tomorrow they might get a little bit of a push to the upside, if Netflix holds. This Amazon still looks very good. Maybe you buy Versi 8-day. At some point it takes this out. I'm still in the options. This was our last nice trade there. BABA, I think, is setting up really nice, has a nice bull flag. Last time we had it is when it cleared this descending trend line, and now it's gone sideways for 5 days. I am long some BABA. I also bought some calls for earnings, just because I won't be involved long for earnings, but I'll be in some calls just in case it takes this out. And it's been acting better. I'm not saying it'll get to 110, but it does seem as if it could take this out after starting this new trend to the upside after breaking that. Google also looks pretty good. I'm not in Google, but this too is going sideways. So when you have high beta tech going sideways above the 8-day near all-time highs, to me that says the market's more constructive than bearish. So in closing, I think that there's a lot to like here in the market still. Don't just sell or get short the inauguration, because a lot of the wirehouses say to do so. Wait for the market to tell you that's the case. If you're in your portfolio approach, yes, make sure that you're not in too big just in case they do pull the rug, but don't get distracted by the noise. We've had a great 2 weeks, trading-wise, with lots of setups, and the market itself has done nothing for 6 weeks. It's really tight. Usually when it gets really tight and you start hearing Santelli talk about the tightest range in a decade, then everyone gets frustrated and we resolve. Could happen tomorrow, probably not tomorrow, Friday, but I would say within the next 2-3 sessions, we're either going to be breaking to the upside above this range, or the bears take control. So you have your levels, you have your charts. You want to watch this a few times, fine. I'll also be talking from, I'm going to Florida, I'm not going to Haiti. Not saying there's anything wrong with Haiti, I'm just saying I'm not going to be out of the country, so I'll be on Twitter, I'll be trading, from Florida. I'm just not going to be here in the studio to talk to you like this. Good luck. I will be in touch, and just stay the course and watch the price action and drown out the noise. Have a good one.